What is this, amateur hour?
Here are some mistakes that we see on the capital raising side of things. I'm not going to read off all these slides because the welcome email has this, so you can always read these over. But massive overpromising is a sign of amateur hour for people raising capital because they're focused on the wrong thing. Promising a 50% IRR is not what allows investors to move forward. It's really having high conviction in the person and their model. How do they add value? What they're doing unique? Does it make sense, etc.? If you don't take what you're doing seriously, no one's going to take you more seriously than you take yourself. So if you haven't spent $9 on a professional domain name, a professional email address, maybe you're just early stage and it's a great time to partner with a big client or investor. But they're going to read into it as like, okay, this is just an idea. And that changes maybe the leverage. So like, oh, you really need a lot of help. You don't have a website, you don't have an email address, you haven't done anything yet. If I come in, I want to be like a huge partner in this. I'm not going to be just a small investor, right? And a business person will feel that out pretty quickly. Deals you do as an investor may be ones that do need a lot of your help, obviously. But a lot of times when you're raising capital, you have to be politely persistent. We had Chip Perkins on stage 2 days ago in Beverly Hills. He has raised over $7 billion over 30 years. He runs a capital raising firm. They have the best software, best CRM, best data sets. They go to the most expensive conferences in the world. And they've been laser focused on raising capital for 30 plus years. And you know what's amazing hearing from him is he says it's still hard. He says that you are a genius if after 30 years, you could go to 600 people to find 100 investors. He goes to 1,000 plus to find 100 investors to get a deal raised after 30 years. So it's almost depressing to hear. It's like, does it ever get easy? I mean, his answer would be no, for sure, never gets easy. Obviously, if you're the founder of a firm and you go from a couple million in revenue to 50 million, 100 million in Wall Street and the market loves you, you can have a good moment in time. And I'm sure things do get easier for people with momentum and wind at their back. But from Chip's perspective, it doesn't get easier to the degree where you just snap your fingers and all the capital comes in. And so I think it's healthy to hear that and know that, because that means you really need to avoid all these sort of obvious type mistakes when you really think about it and have that unique edge and do some things which are really excellent. The other thing that Chip drove home at the event over and over again, and we recorded that talk, it'll be going up into our portal, is that being spot on something that's not just unique, but is exactly what investors want. It's really what they're asking for. And as elementary as that sounds, he brought it up 5 different times, and he's one of the most experienced capital raisers in the United States. And so there's probably 5 other people that have raised $7 billion or more as a placement agent capital raising firm. Always raising his goals to raise more and more capital for sure. He says he's raised a $800 million check, a $400 million check. He says, ironically, those investors are so sophisticated, like the sovereign wealth funds of the world, and they have so much staff, slightly easier to get those done in terms of like workload, but having exactly what they want is like the key, is what he brought up. So I just thought that was really interesting, some of his takeaways. The other thing that is obvious after doing this for a while is that, you know, Michael Jordan had one of the biggest work ethics in the world, very talented, and he couldn't go straight into pro baseball after playing basketball, even his reputation, his money, and his influence and everything. So for someone to come into capital raising, have never raised capital, and to say they're doing $1 billion resort on an island in the Caribbean or an oil and gas deal in a country on the other side of the world for $1 billion and they've never raised capital before, it's just not going to happen probably. More power to you if you can go from zero to doing a $50 million deal or $100 million deal, but usually it's stair step. And if you can skip a few ladder rungs up on the way, then more power to you. But lots of times it is a sign to investors to back away when something either feels too foreign to them industry-wise, country-wise, or really, really massive, but currently you haven't done a lot and they don't have a lot of faith in it sometimes. So you just have to bridge that gap with experience, a great board, doing some small components of the deal. If you really believe in the big deal, do some small parts of it first. So it's just something I would encourage you to consider.
Join the Family Office Club by visiting familyoffices.com. We look forward to seeing you at our next live event.